Welcome to video 21. In this lesson we'll be talking about supply and demand. What it is, where is it, general concept, supply and demand patterns, benefits to understanding, strong base versus weak base, drawing precision boxes for no base, drawing precision boxes for base, support resistance and supply and demand, support resistance and trend, and I'll probably not be doing the live chart. Maybe a later date if people watch these videos. 1. Supply is the amount that is available and demand is the quantity of an asset that people are willing to buy. The zones are determined by perceived value. Where does the seller think the best reasonable price will be in the near future, and where does the buyer think the best reasonable price is to buy in the near future? I say near future because the more time passes, the less consequential the zone is. In this example, we have a farmer on the left and he has 2 apples. He is the seller. He has the supply and determines the sell zone. On the right, we have the buyer and he buys the supply and determines where the demand zone is. This is how the market works, except there's thousands of buyers and sellers figuring the supply and demand out. Your objective is to buy at the lowest price and sell at the highest price. Shorting allows you to borrow the item at a higher price and get the difference when you sell it at the lower price. So if I borrow the apple at $1.20, I can sell it later at $1 and make 20 cents. 2. You will hear supply zone and sell zone together. You will also hear demand zone and supply zone. They are synonymous. I prefer to label them buy and sell zones because it's just simpler for my brain to compute that. Keeping it simple. I want this training to be as universal as possible, so I'll try to use both terminologies for sell and supply zone and buy and demand zone. Eventually you will hear me phase out using demand and supply zone, as I'll stop trying to use both. The buyer demand zone can be identified where previous buys have been made in the recent past in one spot or an area. Of an area. Recent past in one spot. Or an area, yeah. Remember that these zones are only identified after there's been a move down, then a definitive move up, or a move up and a definitive move down from the area. We'll draw the zone. When the candle before the move is smaller than the previous candle, we will draw the zone, from the top or bottom of the candle to the end of the tail. When the candle before the move engulfs the previous candle, we'll go from half of the body to the end of the tail. If anything isn't clear, make sure that you listen to what I say and then pause the video. When there's a tweezer top or bottom or long tails before the definitive move, you'll draw your zone from the furthest tail to the body of the last candle before the move. When there's no big move and the change of direction has no base and price slowly changes direction, you'll use the last 2 candles at the first change of direction and draw from the furthest part of the body to the end of the tail. The top red zone is the farmer selling the apples, trying to sell at the best high price, and on the bottom we have the buyer trying to get the apples at the best lowest price. As I said before, the green zone represents thousands of people that think this is where to buy, and the red zone is thousands that think this is the best place to sell. If everyone agreed on what those prices were, we'd sit in an absolutely tight range. You make money as a trader by correctly predicting the best prices to buy or sell enough over time to be profitable. This is why emotions kill traders. There's no room for how you feel in the market if you want to be profitable. I think the faster you lose, the more emotional you are. I've watched this pattern in myself and other traders or people trying to trade or invest. Have you ever bought a peak for it to come crashing down? That is the rule. There's the rule and the exception. If you want to be the exception, go buy a lottery ticket. If you want to be the rule, you have to depend on long-term success and not depend on luck. You need to depend on your discipline, strategy, and risk management. If you want to get rich slowly, you're in the right place. It may be slow, but it's sustainable. Moving on. 3. Supply and demand patterns. These are similar to trading trailing candles. You can see supply trailing off or demand trailing off, signaling a reversal. 4. Understanding supply and demand will help you identify areas of values. On top of the other tools that give you another piece of evidence you can stack in your favor before executing a trade. It will help you determine where price may move to, so you can adjust your stop loss. You will identify areas to put a trailing stop where you know demand or supply might affect the price. Also, it can help determine where you think price can make it in order to set your take profit. 5. Base versus no base. When price redirects, it will create a base or no base. No base is a redirection of a price that is quick. It doesn't make a series of indecision candles before changing direction. It just changes direction as though it's slammed up or slammed down. Price changes direction strongly. The other type of redirection has a base, and it has a crawl into the other direction. Price changes direction weakly. A base or no base can tell us where supply and demand are weak or strong. 6. To draw precise boxes for your zones on different types of setups. On number 1, we have long tails and price has redirected down. We'll draw our supply zone at the top of the tail of the bearish candle where price continued down afterwards. On number 2, price has redirected after a very large bearish candle. We can use a previous green candle that's engulfed by the bearish candle to draw a supply box, or use half of the bearish candle. On number 3, we would use the entire bullish candle. Remember that price will need to have continued upward after these two candles for this to be considered a demand zone. I'm not going to go too in depth here, as I believe the general concept of supply and demand is more important to understand than precisely where to draw a box in every unique scenario. The purpose of drawing this zone is for it to be another piece to show you this is where I should look at entries or exits or stop losses. We're stacking evidence, and this is another piece of evidence in your bag to stack. Another note is the stronger the move is from the zone, the stronger the zone. So if you have 3 soldiers after the base or no base, you know that's a strong zone. Conversely, the weaker the move, the weaker the zone. 7. Drawing precise boxes for a reversal with a base. For a sell zone and supply zone, you'll draw the box from the top wick to the bottom of the body on the red candle before the down move. For a buy zone, demand zone, you'll draw the box from the bottom of the bullish candle wick to the top of the body on the green candle before the up move. If there's a doji candle, you can just draw the box from the top of the wick to the bottom of the wick. 8. Now we'll talk about support, resistance, and supply demand. They both show you where buyers and sellers are strong. The biggest difference is the supply demand zones can show you where to put entries, stop losses, and take profits. I like to look at my trades from the reverse side, and my take profits are often where I think a good entry might be in the future, like entering at the demand zone and exiting with profits at the supply zone. It is easier to be more precise when drawing support and resistance. Adding them both together gives you more evidence for your trade. 9. Adding in trend. On the left, we can see an uptrend. We've identified support and resistance. We have identified trends. Now we can wait for support or resistance to be respected to look for candles in supply or demand zones. Or we can wait for break of support and resistance and then find candle and supply and demand zones. To take a trade, if you go up a time frame up and are supported by trend, it's further evidence for your trade. Stack evidence on all your trades. Candles, support and resistance, supply and demand zones, trend. If there's not enough evidence, set an alarm and check again or walk away from the trade. You are paid to wait. Slide 13. Alright, we're not going to do the live chart. And if you would like to mark up 4 setups and find support and resistance, supply and demand zones, and trend, and your entry and stop loss, and a take profit on a live chart on your demo account on a live account too if you want to. But this would be good homework for you to practice everything we've gone over. Thanks, and if there's anything you actually want to see, go ahead and ask, and maybe I'll make a video of it.